Headlines everywhere say that right now could be the worst time in history to retire. But the truth is, there's never a perfect time to retire. And delaying your retirement just leads to higher taxes and less time to enjoy your money. So in this video, I'll show you what you need to know about the risk of retiring right now, what that actually means for your retirement, and how you can retire with confidence without waiting for the perfect conditions. To start, I need to show you the reason so many people feel like they need to delay their retirement. This chart shows what's called the Buffett indicator. It compares how big the stock market is to the size of the economy, and it's helped predict the top of the internet bubble and the bottom of the financial crisis. Over the last few years, prices have spent a lot of time in this orange zone and recently crept up into this red zone, levels that have only shown up a handful of times before. The last time it was this high for an extended period was in the 1960s, and what followed was one of the worst periods in market history, where the Dow crashed nearly 30% and didn't reach a new all-time high for over 14 years. So when the Buffett indicator looks like this, people assume trouble is coming. But markets have looked scary before, and people have still had great retirements. So what makes people say this could be the worst time in history to retire? And what does it have to do with the market? I'm sure you've heard of the 4% rule, which was created to find out how much a retiree could withdraw from their investments each year without running out of money. And the reason it's 4% and not 4.5 or 5 comes down to 1 year. When researchers looked at every year someone could have retired, going all the way back to 1877, they found that 1966 was the single worst starting point. If you had used the 4% rule in 1966, you'd barely have half of your savings left after 10 years of retirement. So if the Buffett indicator is right, and today really does resemble 1966, it's easy to see why so many people keep delaying retirement. But if today really does turn out to be another 1966, does that mean retirement is off the table? Let me show you what would have actually happened if you retired in 1966. This visual shows two people who retired in 1966 with the same portfolio. This first line shows the traditional 4% rule, withdrawing a fixed amount each year adjusted for inflation. Over time, the portfolio is slowly drained, and it runs out before age 90. This second line shows the same retirement, but with a more flexible spending approach. Instead of staying on autopilot and spending the same amount each year, you adjust based on the market. If the market is up, you'd spend more, and if it's down, you'd pull back. And just from this one change, you'd go from running out of money completely to having over $1 million left over. So even if you retire at one of the worst times in history, the solution isn't to delay retirement. It's to use a smarter spending strategy, one that adapts as your retirement unfolds. But here's the problem. When you ask most retirees what they'd cut if the market drops, they don't have an answer. And that makes every dip feel more stressful because every expense starts to feel risky. But the fix is actually simple. You just need to know how flexible your spending really is. And the way to do that is by separating your spending into needs and wants. If cutting back means skipping a trip to Italy and not skipping dinner, you've got more room than you think. And suddenly, retiring at the wrong time might not feel so risky. But a lot of people still feel like working just a few more years is the smart thing to do. They assume that more income and more savings means a bigger cushion. But this chart shows the growth of your savings over time and where that growth actually comes from. Early on, your savings are driven almost entirely by what you contribute. But over time, investment growth takes over. And by the time you're near retirement, your new contributions do almost nothing. So working longer doesn't help nearly as much as most people think. And what many retirees miss is that those extra paychecks can come with a hidden cost. Once you stop working, there's a small window of time where your income drops, but you haven't started Social Security RMDs yet. That's the window where smart tax planning, like Roth conversions or tax gain harvesting, can save you thousands. But the longer you keep working, the more you shrink that opportunity. So in many cases, the cost of working longer isn't just your time, it's your taxes too. And the only way to know if working longer is helping or quietly costing you is to run the numbers. And if you want access to the same software we use to help our clients see how timing affects tax savings, how much they can safely spend, and whether they'll outlive their savings, I'll include a link below for you to get free access. But there's another factor that has nothing to do with taxes that makes people feel like they need to keep waiting to retire. This chart from JP Morgan shows the probability of living to a specific age or beyond once you reach age 65. For a couple in excellent health, there's a 73% chance one of you will live past age 90. And even for those in average health, there's still nearly a 50% chance. That means retirement isn't a 20 or 25-year problem anymore. For many couples, it's closer to 30 or even 35 years. And when people realize they may need their money to last that long, it makes perfect sense why delaying retirement feels safer. But is outliving your savings really the risk you need to be worried about? Let me show you a simple idea that comes from Bill Perkins' book, Die with Zero. As you move through life, your money tends to grow, but your health tends to decline. And the highlighted area here is the window most retirees don't think about. It's the period when you have both the money and the physical ability to enjoy life. Every year retirement gets pushed back, that window gets smaller. And what gets lost isn't money. It's experiences you can never get back. So the bigger risk isn't outliving the money you saved, it's waiting too long to use it and missing out on the life you saved it for. But there's another reason that makes retiring too early feel like a mistake you can't afford to make. A recent study looked at workers in their 50s and 60s and what happens when they separate from their employer. Across all groups, fewer than 1 in 10 ever regain the income they had at their previous role. So if you get this wrong, you may never return to the same career, the same income, or the same sense of control. While it feels like walking away is the biggest risk, what you really need to worry about is what happens if you wait too long. Because here's what most people don't realize. Nearly half of retirees don't leave their career on their own terms. They're pushed by layoffs, illness, or sudden life changes, and it usually comes with zero warning. And this chart shows how impactful that can be. People who chose to retire reported significantly higher life satisfaction than those who were forced into retirement. So the real risk isn't retiring too early, it's waiting too long and losing the chance to retire on your own terms. But even after seeing this, most retirees still struggle to walk away from work because of one deeply rooted fear. A recent study found that 64% of Americans worry more about outliving their savings than about death itself. That fear alone is enough to keep millions clocking in long after they want to walk away. But are retirees really as unprepared as they think? A Gallup survey has been asking the same two questions for over 25 years. Do you expect to have enough to live comfortably in retirement? And do you actually have enough now that you're retired? The green line shows what people expect before retirement, and the blue line shows the reality from retirees. And as you can see, there's a massive gap. Take the early 2000s. Just over half of pre-retirees thought they'd have enough. But 20 years later, nearly 80% of that same group says they do. So while the fear of not having enough is loud, it's usually wrong. And retirees consistently underestimate whether they'll have enough to retire comfortably. But the fear of outliving your savings isn't just about money. It's about the picture people carry in their heads of spending retirement constantly second-guessing every purchase, cutting back, and feeling anxious that one mistake could ruin everything. But is that really what retirement ends up feeling like? This headline from the Center for Retirement Research at Boston College says it all. Retirees tend to be happier than younger people, even if their finances aren't great. In fact, when researchers track retirement satisfaction over time, they found that not only are satisfaction levels high, they actually increase with age. People in their 70s and 80s are reporting more happiness than people in their 20s and 30s. And this quote from one retiree captures what they found perfectly. The rug in the entryway of our house is worn thin. 20 years ago, we would have replaced it. Now, we just put colored paper underneath the hole. What sounds like settling is actually kind of emotional mastery. Retirees have a greater ability to adapt, cope, and focus on what really matters. And because of that, retirement turns out to be the most enjoyable period of many people's lives. So the bigger risk isn't having to live below your means. It's missing the best years of your life, all because you thought you wouldn't have enough. So now you know how waiting for the perfect time to retire can cost you in money, time, and experiences, and how to retire sooner with more confidence and less risk. But even after they finally retire, most people still face one big problem. They're afraid to spend their money. Not because they don't have enough, but because they make one mistake that quietly costs them their retirement. Watch this next. It shows you the most common spending mistake retirees make and how to build a plan that lets you enjoy your money without the fear of running out.